We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to do a flash alert on the US dollar in a bearish tone. We have the chart in front of us, the DXY, US dollar. It's a daily chart. And we have a dominant cycle of around, 400 days. Now you see the red line there? Quite well formed with the highs and the lows. Okay? And we've got a smaller time frame of cycles. Well, the big red cycles around 920 days, and the smaller cycles are between 412 and 402 days. Okay? That's just a bit over a year. And as you can see here, this well-formed tight cycle has been working well ever since the, I think that's the 2009 low, if I just, 2008-2009 low, okay? Which you probably could say that is the emotions coming out of the central banks, supporting the market on every dip and low, okay? Now what I'll highlight, a fractal. And a fractal is something that's happened before, it could be happening again. May not exactly happening, like it's one of those things we say history rhymes. Here we have a falling US dollar, a bounce, and then it falls down again for another leg. Here we have a falling US dollar, a bounce, like here, and then it rolls down for another leg. Now the reason why I say that, we have a cycle high here, like that cycle high there. We have a cycle low here. We have a forecast cycle low here in the red line. You see that, the red line there? But we also have this minor cycle peak that could be rolling over. Minor cycle peak which should be rolling over to another low. Okay, that's what I'm expecting, is something a bit like this. Now I'm just going to get closer into the action. Cut it in half. Now we rebuild the cycles that are closer so I can show more detail. Okay. Now we can see that. So here I'm taking we're going to focus on the small cycle. This is the tight cycle. This is the 400 to 412 cycle, and we're going to go down to our detrending price oscillator. So here we have our price base adjusted for the DPO in 412 days, and the cycle of 400 days. And as you can see here, the lows and the highs of the cycle swing is pretty good. Okay. Now I just want to refocus back on the fractal that I talked about. This is this period here where the we had a peak here and it rolled down, and a cycle peaked and rolled over again for another leg down, which is very similar to what's going on here. Now we just had a rather dovish end of July from the Fed. They were very careful not to make a mistake like they did down here. They made a mistake and the dollar rallied, thinking taper was happening in a month or two. They came out here and found another excuse for the taper to be delayed. They're going to have a taper reason once inflation was transitory. Now they say they're not going to taper until the labour market has repaired itself. I wouldn't be surprised if they had another reason, that the Delta variants or some other variants is going to cause us to hold the taper. They're going to probably work out that the sun is too hot and they can't taper. I mean, whatever excuse they can come up with, they're not going to taper. With Powell having his need to get his job confirmed in February, and with the Democrats who want to get re-elected in November next year, and obviously the Fed's loaded with Democrats, I just can't see any tapering going on, even though the banks out there and a lot of newsletters are talking about some sort of kickstart to a taper program which may be announced in Jackson Hole. I put it to you that anything coming out of Jackson Hole will be delayed until March or May next year. So we'll be kicking the can and jawboning it down, jawboning the taper down. So I suspect a nice roll over the US dollar here, as with the cycle. Now as you can see here, it is primed to fall a bit lower. This is the cycle I'm looking at here, the short cycle. It's come up, got a low there, peak, and it could easily roll down into the middle of 2022. Alright, so here's the end of 2021. Some sort of peak around here, it's late 2021, and fall gently into the middle of 2022, which will be perfect timing for the Democrats getting into November 2022 midterm elections. They don't want it to fall fast. They want it to gradually lower. I'm not talking about a crash. I mean, obviously they don't want a crash, but you can actually see this US dollar trickle over, maybe do a little bottom here and trickle down a bit, and maybe creep down to 85. If it gets excited to 80, obviously all the anti-US dollar trades are going to do very, very well. But bet against this lower US dollar cycle very carefully. If it is going to go higher, we want to see it'll see some sort of pattern. But I'm just saying, be alerted. The US dollar has got a very bearish tone into it, into early and mid 2022. So keep an eye on that. That's the US dollar cycle. Thanks for watching.